Come again. Today we are going to do introduction to shares. I know I've done other videos before. These are beginner friendly for those who may be new to share investing, so that you understand what shares are. So what are shares? When you buy shares, you're not just buying those numbers you see on the screens. You are buying a small piece of the real company. Let's say you buy shares in Safaricom or Equity. You are buying ownership of that company, a small piece. You become a shareholder. So it's like the people who started that company, you are part of them. You run the company together, but you don't have a direct say. You're just a shareholder with the rights that are dictated in the listing rules at NSE. So think of it like this. If you buy Safaricom, which have over 40 billion shares, and you buy just 1,000 or 100, you're owning a tiny piece of Safaricom. Out of those 40 billions, you own a part of it. You are a shareholder. So then how do you make money with shares? One, dividend. Company makes profit. You have seen company announcing we have made a profit of this, how much. So they share part of that with you. It could be twice a year, once a year, or as and when they want. That is called a special dividend. If it is once a year, it is first and final. If it is twice, then there is interim and there is final. We'll come to all these terminologies. Don't worry about them. So that dividend is sent to you directly. When you open an account with a broker, you give them the bank account or M-Pesa number where dividend will be paid. That's why it is sent to automatically. You don't need to do anything. Price growth. If shares price increase, then you can sell later at a higher price. It's called capital gains. So you buy low, then when prices go up, you sell. You have to do the actual sale. If they go high and you don't sell, then prices go down. You still not be making profit that was initially there high. You sell at the price that is current. If it is at a loss, you'll be incurring a loss. So always check portfolio valuation. If it is at a profit, you can decide to take that profit. But as I have trained before in the other videos, you can use shares to create wealth. So let's say you buy shares at 20 and it rises to 28. If you sell, you can make that profit of 28. But remember, you have to factor out cost. That's around 40%, which you can't get in money market fund or any other product. And maybe during that period before you sold, you got a dividend for one share at 120, so you multiply by the number of shares. So how then do you buy shares? Shares you can't buy directly from NSE. The way it works, you have NSE where shares are listed. You have the company that is listed. We'll come to these in details. That company floats its shares at NSE, then you buy. When you want to buy, you open a CDSE account. That is done through the broker. The broker will open two accounts, a CDSE and an internal broker account. So you deposit money in the internal broker account. When you buy shares, the broker pays CDSE. Then CDSE will move shares from the person who have to your CDSE account. That is at CDSE level. Then the broker will show you that report. So broker handles cash and orders. CDSE moves shares between CDSE accounts. Then NSE, they are the ones now where you do the actual sale. It is the market. Now this market is fully regulated by CMA. There is nothing that can happen to your shares. We are fully regulated. All brokers are fully regulated, and the players that are participating in NSE. The company that is listed usually have a registrar who manages that register of shareholders, and also any corporate actions from that company. They are the ones who prepare those announcements, and then they share with them NSE for announcement. So we'll come into details. So in Kenya, the market is NSE, Nairobi Securities Exchange. So then how do you open account? You can open account through the licensed brokers. There are many, there are over 26 if I'm not wrong. So that's why you open account, either digitally or through the manual process where you fill in the manual forms. When you open account, then you deposit money your trading account. That is, you deposit money into that licensed broker's bank account or through their pay bill. They are the ones now to send that money to CDSE. So the broker have your cash. When you buy shares, broker no longer have your cash. It is CDSE now who have your shares. And you can move those shares from one broker to another. You are not limited. So you can use a broker's online app or portal, or if orders go through manual, you go through the manual process to buy and sell shares of the listed companies. To track your portfolio, so after you buy, then you can track your portfolio through the apps or portal. Yeah, tracking means checking whether you are making profit or losses, so that if you are making good profit, you can always offload some. And it's only on portfolio valuation where you can make a decision to sell. It is not the broker to recommend for you. It is portfolio valuation that tells you when to sell. I repeat again, portfolio valuation plays a very great role. Never ask a broker, can I sell my shares? No. Go to portfolio valuation. Have you made profit? Are you willing to take that profit? Take it. Dividends, you can track them, but not in your CDSE account directly. The way you can track them in your CDSE account is by knowing the number of shares, then you multiply by dividend amount. That is paid directly to you. If you want to track dividends, you need to have an offline Excel sheet or a book to write, or a bank account that specifically receives dividends. So all brokers, they are licensed by CMA. No broker is allowed to trade without CMA licensing. And remember, there are agents out there. Agents are not brokers. Agents, they are contracted by brokers. So don't mix the two. An agent is a person contracted by a broker to act on their behalf. And if you lose your money through an agent, you lose it for good, unless now you go through police. A broker, your money can never be lost because they are licensed by CMA. Anything you have against a broker, CMA is the court. So when then do you sell shares? As I've said, when portfolio valuation is in profit, or when company's profit or growth outlook weakens. You can see the company is losing in value. Don't hold your shares forever. You'll be left with a skeleton that you can't sell unless you want to take losses. You can exit early before you lose, but that decision must be supported by something called fundamentals. If you look at the channel, I've done those videos, but I'll be doing in beginner friendly. Those ones which have been there are for maybe those people who have experience in the market. Or when prices rise sharply. Remember this market, when prices are on bull run, that is when prices are moving up at a high rate, 25% and above, at one point they might slam down. That time you can take profit, then buy back when prices go down. That is called locking in profit. Or when you want to rebalance and you reinvest in another strong company. Maybe you have invested shares in one company, then you have realized the fundamentals won't support this company forever, so you sell, take your profit, but you go to another company. So when what do the shares then become in future? You have bought, you don't want to sell. Then what do they turn into? They turn into long-term wealth. As prices rise, the value of shares rise. That is capital growth. When you invest this dividend, they compound. You are buying a dividend, you have bought shares, they have given you dividend. You use that dividend to buy another dividend. When you receive that, you buy another dividend. You are compounding. That is, you are increasing your wealth without incurring any additional cost. But remember, you have to deposit money to keep on building your wealth. Then ownership power, you can vote in AGMs. When you become a shareholder, you're entitled to go for those AGMs. Then legacy, very important. When you buy shares, these are things you can pass directly to your kids, and they enjoy the same benefits up there. Imagine accumulating a portfolio of 10 million, then you pass it to your children. Just divide your number of children you have with that 10 million portfolio. They don't need to come and struggle with CVs out there looking for jobs. You give them a footprint to their future life. And you can also invest for those kids through minor accounts when they are still young, so that when you are passing, they already have a wealth they are taking over. So for minor kids, after 18, that's when you pass over to them. They continue trading. Imagine giving your kid a portfolio of 1 million. When they are starting life, do you think that kid will come and struggle outside? That's the kind of life we should be thinking. Creating a legacy and supporting our children. That's what big wings do. Go to many companies. You find the people at the top, they are related to the shareholders of that company. We are the bottom. Do you want your kids to come and struggle the same way you have struggled? No. Build a portfolio for them with 1,000 a month each, or 500 each. I've seen even people who put 100 shillings a day. The day they have 100 and they buy share. Right now you can buy from 1 share upward. What can't you create with it? In short, shares are ownership, there is income, and there is growth for future wealth generation. If you have found this video helpful, remember to like and share, subscribe for more. You can get a detailed tutorial on this YouTube channel, on my YouTube channel, My Wealth Guide KE. I'm rebranding from GenderSad Studio to My Wealth Guide KE with time, so that it reflects the purpose of that YouTube. And I will leave a detailed tutorial on my blog about shares. It's already there, most of them, but also in beginner friendly. Remember to join my WhatsApp community to learn all these. It's called My Wealth Guide KE, link in the description of this video. And I'll be on social media soon. I've already started migrating for those who have seen these channels. And remember, you can always support me. Thank you so much. Let's meet next time.